Oh, you've got that right. We're starting off a great evening of earnings with a little bit of AMD, right? One we've all been looking at for a while because the stock is absolutely red hot, and it has been red hot for a hot minute now. The stock, after reporting these earnings, up right around 2.5%. Just to put it into perspective, over the last year, the stock has seen a growth of nearly 100%. The thing's nearly doubled in the last year. If you look over the last 5 years, this thing is, what else do you say? Up 4,600%. The thing is, it's kind of out of control. Okay, it's on just a path to the moon, as we might say. Slowly churning up Mount Everest, as you see from this 5-year chart. So let's take a look at these earnings and see why the stock's up as a result. Now 1.7. Again, it's going to be choppy. It always is. They just reported, so interesting stuff here. So I anticipated a beat on both aspects. Honestly, not surprised that they beat to this extent, but quarter four non-GAAP EPS of 52 cents beats by 4 cents, and a GAAP EPS of $1.45 beats by $1.04 is actually a much bigger beat than I expected. I didn't think that was feasibly possible. I thought they'd beat by a few cents. So to see that GAAP profitability see such a good turn for the better, really, it's pretty significant. That means a lot for this company, and it really helps valuation. It helps a lot of what's going on there. So that EPS line is looking really good, in my opinion. And from revenue, I expected it to be right around 50% year-over-year growth. It ended up being 52.1% year-over-year growth, $3.2 billion, beats by $210 million. So not too bad, all things considered. Really good stuff. Good numbers here. These are good numbers, even bigger beats than I expected, which, I love to see. For quarter one guidance, they're expecting around $30.2 billion, plus or minus $100 million, which would be a 79% year-over-year growth, driven by growth in every single one of their businesses, and a non-GAAP margin around 46%. For the full year 2021, they're expecting revenue of 37% growth year-over-year, growth in all businesses, and a gross margin of 47% for the full year as well. So pretty good guidance too. What can I say? So this is a company that so far has beat on all three aspects, the top line, the bottom line, and the guidance. All of these aspects in terms of these earnings so far have been a hit, and that's why I think the stock's up so far. We'll dig a little deeper into this press release, see if we can find anything better. Obviously, we love looking at stuff. So quarter-over-quarter revenue, 53% year-over-year growth, as we saw. Full year was $9.76 billion, up 45% year-over-year. That's some pretty darn good growth year-over-year. I can't lie to you. That's a good bit of growth. And quarterly and full year net income more than doubled from the prior year. That's where I talked about that EPS line and how important that GAAP profitability line is for them, and what they're able to do with that. That's really incredible, the numbers they've been able to put up in terms of that. So really, really good stuff. Here's obviously a breakdown briefly of that. Operating income of $663 million and net income of $636 million. Really good numbers there. You really do like to see it. Here's a chart of the breakdowns in terms of year-over-year growth. You saw gross profit, saw 53% growth as well. Pretty nice stuff. Quarter over quarter, you even saw growth in every segment too. That's what's really nice. But where you really see this is this net income line, as I'll highlight here. Look at the difference here. Last Q4 2019, they only brought in $170 million in terms of net income. This quarter, they brought in $1.7 billion. That's quite a difference. That's really, really quite a difference. It's very significant. That's a great job by them. That's just proving how the company continues to evolve and really further grow. Profitability is a major part. It's one thing to get revenue blooming, but to grow that profitability is really important as well. And I usually look at the GAAP financials, so that's always something that I tend to enjoy looking at. From an annual perspective, You saw net income saw a 630% growth here, 2.5 billion on the year compared to 340 million. Wow, I mean that's incredible. EPS was up 587%. That's just really good stuff. It's really good stuff. Yeah, I mean, I don't know what else you want me to say. It's really good. So from the quarter four segment, specifically what we're looking at here, obviously, both computing and graphics segment and the enterprise, embedded, and semi-custom segment leading the way here. Gross margin up 1%. Obviously, from an operating perspective, we saw that. As far as segment summary, the computing and graphics segment was up 18% year over year and quarter over quarter, primarily due to strong sales of Ryzen processors. Client processor average selling price was lower year over year due to a higher mix of Ryzen mobile processors, which are obviously the cheaper model, not quite as intensive as what you're going to get in a high-end PC or desktop. These are for, obviously, mobile devices, so they're cheaper processors as a whole. That leaves that average selling price down, not a shocker. Radeon graphics product average selling prices were higher year over year and quarter over quarter. Good for them. And operating income for the segment was 420 million compared to 360 a year ago. So even growth in this segment as well. Pretty nice to see, driven by Ryzen processor sales being higher. The enterprise, embedded, and semi-custom segment was 1.2 billion of the revenue, up 176% year over year, and 13% quarter over quarter, driven by higher semi-custom and EPYC processor sales. Really nice. And operating income for the segment was at 243 million compared to 45 million of a year ago and 145 million of the prior quarter. 141 million of the prior quarter. So I mean, that's just overall big growth. That's really good. That's really good stuff. For the full year, there's that recent PR highlights. It's worth mentioning at the Consumer Electronics Expo here. We saw AMD announce the world's best processor for laptops, the AMD Ryzen 5000 series mobile processors with Zen 3 core. Pretty exciting stuff. If you look at CES every year, which I think you should, the Consumer Electronics Showcase is like it's really exciting. It's really dorky. If you're into anything, really, if you're into the future, I mean, it's something you should look at because these are this is where people show off really the future of electronics and where we're going as a society. It's worth looking at because you can see some really exciting stuff that way. It's not necessarily all gaming. It's a variation of literally everything from automobile, autonomous driving to security cameras with facial recognitions. It's everything there. So it's really worth looking at. So pretty cool. They launched the Radeon RX 6000 series of GPUs. Pretty exciting there. They demonstrated third generation AMD EPYC processors, codenamed Milan, for the first time. Pretty cool. Amazon Web Service expanded its AMD powered cloud offerings with the Amazon Elastic Compute Cloud EC2. It's cool, I suppose. Microsoft Azure is using the second gen AMD EPYC processor to power its HP version 2 virtual machines. Pretty nice. HPE, CSC, Finland, and Europe HPC introduced the upcoming pre-Xscale Lumai semiconductor in Finland, powered by the AMD EPYC CPUs. What a shocker. They're all over the place. It's AMD. They're putting everything. And AMD announced the AMD Instinct MI100 accelerator. Pretty cool, which is world's fastest HPC GPU for scientific research. Pretty cool stuff. And finally, IBM and AMD announced a multi-year joint development agreement to drive confidential computing and hybrid cloud environments through an open source software. You know, it's really cool. Partnerships are really big, especially for this company and its growth segment. I mean, there's really good stuff. Really good stuff. I don't necessarily know what else to say about this thing. We'll scroll all the way down to the balance sheet. Look at that to top this one off. see if we can find some really exciting stuff here. We see a total current asset line right now sitting at 6.1 billion. That compares to a year ago of right around 4.6 billion. So you do see some growth there. There's growth in several segments here. One of those is a pretty big increase in inventories, if you might notice. So that is worth looking at. Why they're stocking up. My assumption would be obviously expecting more new clients and shipping out those, and potentially having more products built because of these softwares or these chips. We'll take a look at that. The total assets in general sitting at 8.9 compared to 6 billion of a year ago. That's a massive overall increase. $3 billion increased in terms of total assets. A good chunk of that, if you'll notice, is going to be off of deferred taxed assets. So, but still, really nice to see that growth there. Total current liability sitting at 2.4 billion versus 2.35. So a little bit of growth there, but not too bad at all. And if you look at it, total stockholder equity is not in a bad spot at all. Total stockholder equity is sitting at 5.8 billion. That compares to 2.8 of a year ago. So in this last year, in which a lot of companies have struggled on the bottom line here, they have managed to grow this balance sheet and increase equity by $3 billion, which is a lot. You're talking about a balance sheet that's only full of really right around $9 billion in terms of what it's got in it, and 5.8 of that is going to be just equity. I mean, that's crazy to see that. This company is doing a lot of things right, and you see as the profitability line just continues to increase, how this balance sheet could even get even better. The balance sheet's not massive. I won't lie to you. It's not a massive balance sheet. You'd almost like to see a little bit more in terms of a cash position, in my opinion. I think they could boost their cash position. Would not upset me if they did that. As well as, I mean, short-term investments not in a bad spot, but I think the cash positions could see an increase. But overall, as the company grows, the balance sheet will grow as well. So you need to consider that. Now, as far as this stock and purchasing, it's hard to give myself there's no doubt this is the company of the future in terms of processors. I can't deny it. This company's on the fast track to extremely being successful. They're already extremely successful, but they're going to continue the success in the future. Now, if you think about the valuation, trading in a market cap of 114 billion, after today probably 115 billion, while bringing in an annualized revenue of 9 billion, there could be some concerns on that valuation. We also see a PE ratio sitting at 130. It's not a cheap stock, okay? The stock is not cheap by any means. So I personally I'm more of a value investor. I mean, I typically invest in companies that have less inflated values, unless it's going to be a speculative stock for me. Now, this one, I think you won't be upset if you hold it for the long term regardless. If you buy it at these levels, in the long term, I don't think you'll be upset with AMD's return at all. I don't think you will. I think short term is where you might find some concern, because there's a chance you could find a short squeeze in the future, depending on what the stock market looks like this year. It's hard to say, but I like what this company's doing. They're doing a lot of stuff really well. Not something I'm personally buying, but I would understand if you did. So that's all I got for you today, and I hope you really enjoyed.